Hello and welcome to Getting Started with Traditional Commodities and Futures, Part 2 of 2, Section B. Thank you for listening to the first seminar, which is Part 1 of 2, as well as listening to Section A. This is the third installment of the seminar series, and hopefully I'll enlighten you and continue to enlighten you throughout this seminar as I have in the last two parts. Now, once again, my name is Noble Dracone. I'm the author of the books Single Stock Futures for Small Speculators, as well as Futures for Small Speculators. And I'm a senior analyst and president of Liverpool Derivatives Group. The goal of Section B is to finish up what we talked about with regards to analysis of charts and understanding how we go about deciding what trades to take, as well as to kind of eliminate some of the hype and really bring a cohesion to what hedgers and speculators do and how they operate. Let's begin. Once again, the risk disclosure is important. Please do not trade futures if you cannot afford to lose all of the money you put up to speculate or invest. Futures are fast-moving and highly leveraged, and they're not for everyone. It's always best to talk to a broker or look at your particular financial situation and see if futures works for you. Now, with Section B of Getting Started with Futures, Traditional Commodities and Futures, we're going to cover one of the three areas that we talked about. In the last part, Section A, we talked about the futures contracts, the pricing, how price is determined by supply and demand, how to trade price when it's in a backward market or an inverted market, as well as discussing how hedgers perceive price to be. And we also discussed how in normal markets shorts have a pretty strong hand, and in inverted markets how the longs have a pretty strong hand. We also touched upon some of the trade management tools that we use here in our company. So in Section B, it's completely devoted to the analysis of futures charts. We'll go through about 40, 45, 46 different slides discussing how to interpret the data that we get from different governmental sources and how to find the information that the hedgers are using to determine their trading scenarios, and how we as speculators can follow in their footprints and go over several key indicators that can help us. Now, since futures were designed as an insurance tool for the hedgers, there are specific trading tools that I like to use and that I encourage the brokers and clients that I have to use when looking at futures investing. The goal is to really fixate on price and what price is doing and where it's going and how this relates to the supply and demand. There are 5 key points that we'll go over today. The first will be the Commitment of Traders Report, which we touched upon briefly when we talked about governmental sources of information. This is issued by the CFTC. We'll touch upon support and resistance, something very basic that you all know, but I'll give you a different spin on how hedgers view support and resistance and how that can reflect on your own speculative investing. We'll look at overbought and oversold indicators and where to enter and where to exit the market. We'll also look at accumulation, distribution, and lastly, for those of you familiar with options, we'll look at open interest and how they play themselves out in the futures investing arena. Now, one important thing to note, although I've divided each one of these items up into their own separate charts, and we'll be showing you different charts on how they affect trading, the goal is not for you to take any one of these items and attempt to do your trading with them. The goal is for you to look at a comprehensive view of each one of these items and create an overlapping system that'll work for you in your trading. So when I present these tools to you as independent, keep in mind that I actually use all of these tools in congruence so that I can make as best a trading decision as possible and, you know, hopefully profit or minimize my losses using proper money management scenarios. Let's get started. The first item I'd like to talk about is the Commitment of Traders Report. One of the interesting things that I notice about the Commitment of Traders Report is that oftentimes you'll find people, especially promoters that like to hype futures and options, promoting a Commitment of Traders Report information all over the internet. They talk about how this information shows you what the insiders are doing. They talk about how great this tool is in determining where and how you should invest. And then they tell you to pay $100 or $1,000 or even more than that. So even though the information may be of that value, I'm giving it to you today on this seminar to let you know that this is information available freely from the CFTC. And although it may have a value of $100 or $500 or maybe even $1,000, you don't have to pay that in order to learn it today. But treat it as such, because this is very valuable information that you won't find any other type of corresponding information in any other arena. Now, the Commitment of Traders report is something put out by the Commodities Futures Trading Commission. They collect data on everyone who's investing, where they're investing, how much they're investing, how many contracts they're holding, who are hedgers, who are speculators. And so these reports are very important. The government first started publishing these reports in 1962, June 30th, and it was a way to create transparency in the futures markets. Prior to then, no one really knew what was happening in the background. They didn't know who the hedgers were. They didn't know who the speculators were. And it created oftentimes very illiquid and very volatile markets because it created sometimes people to cause fraud. We talked about this last time with the Hunt brothers, and we talked about Nicholas Leeson and his trading of the Singapore exchange and trading futures. Well, think of that times 10. There's a lot of shenanigans going on behind the scenes. And so they wanted to create that transparency that let everyone know exactly how many contracts were out there and what was going on. It's actually a weekly publication. When I first learned about the Commitment of Traders report, it was in 1994. And at the time, the Commitment of Traders report actually released once every other week on Friday. Frankly, I still follow that format. Even though it's released every week, I don't tend to watch it every week. I like to watch it every couple of weeks to get an idea of what the hedgers are doing. And as we'll go through some charts, we'll see why that is. The report originally, up until 1995, was a fee-based report, and that's why some of the people try to charge so much for it. They still are operating and think people are operating on the misconception that they have to pay for the report. Now the CFTC has released this report for everyone to use. You can go on their website and you can download background information on these reports as far back, I believe, as 1962, and definitely for the last 10 years on just about every commodity that is traded with particular exchanges. And we'll talk about those exchanges. It's a weekly report. It comes out Friday at 3:30 p.m. Eastern Time. It's available in both a short and a long format. The short format is very succinct. It talks about the number of positions and how many there are. When you start getting into the long format, it starts to break down exactly who's investing. It's got the largest 4 and 8 traders. They even start breaking down the data by data the data by year, by crop year, so that when you invest, you can look at the report and see what each year, what each month is doing, and how last year operated and how this year operates. I really don't look at the long format. I'm sure there's a lot of data there to be mined and opportunities to be seen, but I prefer the short format to just give me a snapshot of what the hedgers are doing. You can go to www.cftc.gov to really get this information, and it's very easily accessible, and I suggest you definitely look it up after seeing this video today. Now, this is an example of a short form Commitment of Traders report. I picked this because we've seen what's happened now with the recent mad cow disease, and so this is a report of what was going on with live cattle. Now, there's a lot of discussion in the news about the government believing people were doing insider trading and knew about the mad cow before the mad cow and were shorting the market prior to the release of the news. And sometimes you can discover this right here in the in this Commitment of Traders report, exactly who's buying what and what they're buying and why they're buying it. So let's break down what this report, this information this report has.